Hi guys, this is the file I use to calculate position sizing. I also use it for TP, take profits, and managing risk. So I didn't want to share the file. I prefer for you guys to build your own so you understand how the manual manipulation have to be done because it's not a user-friendly file. It's an effective file. So let's jump right in. So you can see different sections in this file. So up here I have just a potential or an actual rate for Euro USD. It's not as precise, they say, as like TradingView or RealTicker. It's just from the Google Finance function, so you can see Google Finance currency, Euro USD, or for USD yen or so on. So it helps for calculation later on in this file for position sizing on different markets and so on. So you have an idea how these are. This is an example of, let's say you start your account with or your different accounts, your trading capital, let's say. Let's say you have 15,000. Um, I live in Canada, and this is based on Canadian dollar, so um, it will be useful for me to calculate in terms of Canadian dollar wherever I trade a USD market or yen market or whatever. I want to calculate my risk in terms of percentage of my capital in Canadian dollar. And here you have the typical risk factor that I calculate, 1% per trade. So this is the header, and then there's a different trade potential or different trade management line. So I'll go to the end to be able to have one that's easy to manage from this this item to when I'll copy it at the end. So the different section here, so this is just plain text, right? So for me to understand what these four lines are about. So this cell, as you can see, um, I'll go back up for a moment. It's the same with this cell here. It's to calculate in terms of US dollar, what is 1% of my capital. So the calculation is done between the remaining capital. Let's say I've started my capital with 15K and today I have 13K because over the past months, let's say I lost 2K. Um, so 13K, 1% of that, and then converted from USD to CAD with the GDO cell. So this is to say that 130 Canadian worth 97 and some odd US dollar. So let me go back to the bottom here. Okay. Now let's say I'm considering a trade on silver. And I use the SLV ETF. Okay, and let me just load it up on my other screen just to have an idea how much it trades for right now. Silver, where is it? Silver SLV. So it closed at 15.56. So let's say I was able to buy at 15.56 just for the sake of this example, or not buy, but considering a buy. And let's say through my technical analysis, I estimate that the right position sizing for my stop loss would be at $15. So, okay, you have the calculation or whatever for these cells when you look into this. So this is my 1%. This is the current price of this market. This is the stop loss that I've defined. And from these cell, the number of units to, you know, that I could be trading is 74 and some odd fraction based on if you can see the calculation between this divided by this minus this. So if I would trade like 174, it would obviously consummate this. So let me type in just for you to show 174 in this cell. Automatically it calculates what it means. But what's going on? Okay, I have too much data over here. Okay, so I would buy 174 at this price, and my 1% is this, and if I would do that and get stop loss, I would lose 97.44 in US dollar, which is about 130 or 129 dollars. Now, I might not want to risk the whole 1% straight up, right? I might, but I might not. So let me give you an example. Let's say on this specific trade, I'm in a mindset where I think that it's a reasonable entry right here at 1556, but I'm only willing to risk a little bit because I think that there's some chances that the market retrace a bit lower, therefore giving me a better price. And together with these two positions, I would want to not risk 1%, but let's say I would want to risk 0.6% of capital or something like that. So I might say, okay, 174 is the amount that I could go in with. So I like to play with multiples of 4, so I could do 25% TP, take profit, 50%. I have that liberty, so I'm mental calculating, okay, 160 is an interesting number, easily divided by 4, and half of that is 80. Okay, let's say I'm considering to buy 80 of this market, and the risk, as you can see, was calculated that if I get stop loss, it's about $45 loss. Okay, so let's say I go and I take that trade. What I do is then I color code the cell a different color. I like to put green to say, okay, I'm in. Now, I should have said one more thing before that. Depending on your broker, you have different margin that will be taken. So maybe you're buying that spot. I'm always using margin, so I need to understand, okay, I have X amount of margin available on my account right now. How much is this position going to consume of my margin? Or how much is it going to try to consume to make sure, I get executed? So sometimes I will add a calculation like this saying, okay, just click here so you see which cells are highlighted. So it's 80 times the current price. So this is the amount of capital to buy this asset. But the percentage of margin that I need to for this specific market on my broker is 9.25%. Actually, I know I did a mistake because I was considering CFD, silver CFD on my broker and not the SLV on my other broker. But regardless, you get the idea. This is how much margin it would consume, and my brokerage account is in Canadian dollar because I'm Canadian again, and this item is traded in US dollar, so I have to multiply by the G2, which is the USD CAD rate. So this taking this trade here, 80 of those, I would need to have a 153, 154 Canadian dollar available on my account, so I have enough margin available, or yeah, available to take in that trade. So uh, yeah. So okay, back to where I was. I took that trade. Let's say I bought 80 of those, and my stop loss is at 15, and I have another cell for the stop loss also to calculate this risk because you'll see at some point. Okay, let's say the market goes down a little bit to like 1530, and like tomorrow, let's say, and at 1530 I'm ready to do my next buy, and given this is a bit of a better price, so maybe I want to buy 100, and at 100, that's interesting. I can, I'm not even at 1% capital. I was saying what, zero point 0.6 before, so yeah, that's a bit more than zero point 0.6. But anyway, you get the idea. Yeah, there's not to do perfect risk management here, is to show how this file works. So let's say I would buy at this 15.3, 100. Let's say I did that. I would color code it to show evolution. So these are just notes that I needed to enter the trade. No needed. Not needed anymore. But now, okay, let's say a few days pass and I want to change my stop loss because the market um, is favorable. I made or latent money, and I'm able to change my stop loss at 15.2. So right now I'm just risking 38 because I would get stop at a better price. Okay. Um, and the trade keeps going on well, and at confirmation, and I want to know where is my break-even point, because I want to set my stop loss at break-even because it's really going well, this trade. So I might say, okay, what is the right price? So this goes down to about 0. So 15.4 is interesting. 15.5, I would be in profit. 15.4, I'm not gonna play around for the $2, but you get the idea. Let's say the course right now is about $16, and placing my stop at 15.4 is about the break even. You could play with one more decimal or whatever to bring it down to exactly 0 or play around, but this is how you can use this to calculate um, where to put your stop loss. So these cells are the cells I would, like the green or the yellow one, are the cells I would edit like all the time just to, how can I say, um, consider which trade or how much I would, you know, how many units I would take at what price type thing. But these cells are, calculated, and I don't play around much. This is like how much risk. Okay, and then let's say I want to, so I did, yeah, the next one I want to show is I want a partial take profit. So I'm about to say, okay, I have 180 items, and I want to take 25% off the table, and that would be done like this. What I do is I copy these cells over. I'm gonna reset those to yellow for now. Delete. Okay, and this cell, this is where I said manual entry is required all the time, because when I copy this one over, it doesn't add, the calculation for these cells. So what I do is I go here and I say, okay, plus, it's always plus, never minus, but plus this cell, this amount, times, open parenthesis, this cell minus this other cell, close parenthesis. And for future copy, if we're gonna go, if I'm gonna use, if I'm gonna need it, I would add a dollar sign right here and another dollar sign right here before the E, and not one over here, just those two, and enter. Okay, and I say, okay, we're at like $16. Okay, so we're at 16, and I'm gonna take out 45, so minus 45. So I've locked in this amount of profit if I'm taking that little sell, considering this stop loss. But at this point, let's say I want to make sure I don't get stopped or have very little chance to get stopped, I might say, oh, I have the chance to put my stop even further. I mean, it might not be a good strategy, but just for the sake of explaining uh, how this can be done. So I play around with the numbers until I find something that makes sense. So this is about back to zero. I sold this 25%. Okay, fine. Let me just get rid of this. All right. And then I want to show you another example of more take profit. So at this point, I took 25% off. I'm going to get ready for the next trade. I don't necessarily wait to do the next trade to copy the cells. Usually as soon as I fill one column, I prepare the next cell. What is key is not to forget that this cell needs plus this times parenthesis, this minus this, close parenthesis, and not forget the $2 signs, and enter. And at some point the market is very favorable. I want to take another 25% off. We're quoting at $17, let's say. So I would be locking in more profits. That's how it works. And I would prepare the next sell. So for now, I don't know where and how much I'm going to trade, but I just want to make sure these sales are prepared. Plus this cell times open parenthesis, this minus this close parenthesis, dollar sign over here, dollar sign over here. And let's say the market just goes crazy against me and it stops me, 15.2. And I add how much left? 90, right? I knew, but just for the sake of calculating, minus 90. And that has been executed. So, of course, I'm at $78 of profit on those threads of trades. This is irrelevant now. And I mean, this entry is over, trade completely over. What I do when I get that is I color code just for some potential future purposes, and I would prepare my potential next trade on the SLV by copying only these cells to another section down below, resetting all of those, all yellow, and these ones are useless, so I would say hide. And the file is kind of reset, or ready for the next round. One more thing is this being on Google Drive, it's accessible everywhere. So whether I'm at home or some other place at work, let's say, I can still access that file. And if you're not familiar, it saves automatically. So it's very convenient. Build your own. Those aqua cells, I don't use them, and I have a little note to help me between my broker and well, whatever, some notes. Anyway, have a good day, guys. Bye.